Okay, there's two important issues I want to talk to you about this morning. Issue number one is Syria, because that's the most important. Uh, this morning, I don't really see any big attacks being led on Syria by the U.S. It seems that. Now, I'm going to tell you, in the past 12 to 18 hours, the likelihood of an attack, an imminent attack, if it was more likely in the last 18 hours, and because it hasn't happened, this means that the percentage of likelihood of an attack on Syria led by the United States is less likely than it was 18 hours ago. In other words, what I'm trying to say is, if it was going to happen, it probably would have happened sooner rather than later, if you understand what I'm trying to say. So because it didn't happen, this is a good sign that there's a possibility that it won't happen, in my estimation. So the percentage of it happening are less. That doesn't mean it won't happen. That just means that maybe perhaps cooler heads are prevailing after all. Because this is a very dangerous situation with Russia, as when the United States pulled that attack and they shot the missiles in, Russia comes storming in, and now Russia's there. They're there. They've got their ships in there and in place now. So we'll have to wait and see what happens, but it looks like the Syria situation is actually cooling down a little bit to me. I mean, it could heat up again, but let's keep a very, very close eye on the Syria situation, because it's a very tense hotspot in the world right now. Now we're going to switch the subject over right now, and we're going to talk about something a little bit different. A second subject that I wanted to talk about this morning. I wanted to talk about the rise in oil price. I'm going to read you an article from Yahoo Finance. Oil rises toward $56 on Libyan oil field shutdown. In London Reuters, oil rose toward 56 a barrel on Monday, supported by another shutdown at Libya's largest oil field. Tension over Syria, following the U.S. missile strikes and signs of an OPEC-led supply cut, is helping to clear excess supplies. Libyan Syria oil field was shut on Sunday after a group blocked a pipeline linking it to an oil terminal, a Libyan oil source said. The field has only just returned to production after a week-long stoppage ending in early April. It means that at least one potential source of additional supply has fallen away for the time being, referring to the Libyan outage. Now, I don't think that the Libyan outage is going to be the big thing to raise oil prices. It might on the very, very short term, but I think what's really going to raise oil prices is when West Texas starts to drop off in their production of oil. And what I'm talking about is actually their production of cheap oil. Now, West Texas has got tons of oil. They got a lot of oil. Canada's got a lot of oil. But that's not cheap oil. And what we're really talking about here is cheap oil. The United States, in order to continue with this charade of the United States dollar, they have to have cheap oil to keep the dollar from going below 70 on the U.S. dollar index. Because I've told you before what's going to happen if the dollar goes below 70 in the U.S. dollar index. We're going directly headfirst into hyperinflation. And so the thing is a lot of people would say, oh, we'll never see the dollar at 70 on the U.S. dollar index. You just wait, boys. You just wait. It's coming. See, it's all linked into the price of oil. And, I mean, I've been just screaming this from the rooftops. I've been telling anybody that'll listen that the United States is only as good as the oil it'll buy. Because the United States dollar is not backed by nothing. The United States dollar is backed by oil. And so the United States dollar is only worth what you can buy in a barrel of oil. And if the oil price doubles, that means your dollar's value buying power is going to get cut in half. And the U.S. dollar index will, if the oil price climbs, The U.S. dollar index will drop down slowly. First, it'll drop down into the 90s, and then it'll drop down into the 80s, and then it'll drop down to the 70s. And when it drops below 70 into the 60s, that's when all hell's going to break loose. That's when the real trouble's coming. And mark my words on this. You're going to see it. You're going to see it when the oil price goes back up. Now, what the Fed's trying to do right now, and whether they're successful or not is not the point. Well, we're going to find out if they're going to be successful or not. They're trying to raise interest rates, and they're trying to keep the U.S. dollar index high. And with these rate hikes, and they can see that the rate hikes are not going to be enough. Boys, they're not going to be enough. They need to come in too and try to sell their toxic assets, and try to hit the upper end of the yield curve as well as the lower. See, when they raise interest rates 25 basis points, they're raising the lower end of the yield curve. But the other end of the yield curve has actually been coming down just a little bit recently. It was up to, on the 10-year, it was up at 2.6, I think. And now it come down to like 2.37. Okay, so it come down to 2.37, and they rose this end. So that's flattening it, see? What they want to do is they want to keep the yield curve steep. So what they're going to do is sell these toxic assets and raise the interest rates so that they can keep the yield curve fairly steep. Now, here's the thing. Here's the ticket. They need to start selling these toxic assets pretty soon if they're going to continue raising interest rates. They can't raise interest rates until they start selling these toxic assets and make the interest rates go up on the other end of the yield curve. I mean, your bonds is going to buy, like your bond yield is going to be greater. So they got to get that bond yield greater. They got to get the 10-year up to like 3% or higher. So that they can raise interest rates again a couple times, because they need to do this, and they need to start doing it fast. They're behind the curve on this. They're behind the curve because the economy's starting to heat up. They know it. If the economy heats up too much, oil prices are going to go up, and the dollar's going to go down the tubes. And this is finally the hyperinflation coming. And it's a war going on, boys. It's a war. Nobody knows. I don't know for sure if the Fed's going to be able to control this or not. Honestly, I don't know. I'm watching. I'm standing on the sidelines. I'm watching almost like a guy watching some sort of a baseball game or something. He doesn't know which team's going to win. I don't know if the Fed's going to win. I don't know if the inflation's going to win. But I know what the Fed's trying to do. I can see what they're trying to do, just like you can see what the team is trying to do. Okay, so this is very interesting what's going on. Keep your eye on Syria. I'll keep my eye on Syria. You can look here, and I'm going to be keeping my eye on it. So you can look here, or you can look other places trying to find out what's going on in Syria. Thank you for listening. Like and subscribe, and we will catch you in the next article. Bye.